And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, January the 17th, 2024. The market continues to act more as if it's really getting breaking down versus building for a finishing rally. And what I mean by that is a lot of the technicals, particularly the technicals that we find, again, the MACD and the RSI, and I take them out and I start looking at the daily, and particularly the daily, you can see that here we are trying to rally, and we look at the RSI, just continuing kind of to fail. Look at the MACD. The MACD is like flat, and flat on the daily is not like and closer to working on being oversold than it is working on building a rally. So in fact, the blue line would have to be above the brown line for it to really be in the momentum is like heading up. So, and we are getting lower highs as this thing tries to rally, as we try to really just continue to hang on to this rally type mode. So again, this did not help momentum. This did not help momentum. But so essentially, as I've also been pointing out, what seems to be propelling the market higher is still, at least in the NASDAQ and a lot in the S&P, are the Mag 7, the Magnificent Seven, the glory children of the tech world right now, artificial intelligence. But at the same time, we're seeing some of the other larger tech companies continue to get hit, continue to work their way lower. So how do we want to put that together? To me, it just is very clear that the markets are working towards what will end up being a substantial top in terms of what comes next. And as I have said previously in the podcast and also within the Elliott Wave updates, is that I don't get out, or I don't discount the potential for the market to do a quick 30% drop. And there are many, many things that actually could kick it off, many things. But what we're beginning to see as the earnings season continues to progress, and next week, we will drop into where we start getting some of the bigger players, at least in the tech world. We're getting Apple. We're getting, Apple's actually on the 1st of February. But I think we have Amazon. We have AMD. We have Intel, we have Meta, we have Microsoft, we have Netflix, and NVIDIA will be late in the cycle as they always are. We have Tesla, we have Texas Instruments, and these are a lot of the stocks that are getting really bruised right now. And so the theory has always been, and moving in, well, the Fed's going to cut, that's a bullish. And we're getting into earnings season, and we know that these companies have just done actually spectacular and will continue to do so, et cetera, et cetera. Because why? Well, because they're involved in artificial intelligence, et cetera. So again, I don't see a market building momentum to make a solid run higher and remain higher. I do see a market that has still a little bit of a push left to it, but it's reaching a pinnacle. It's reaching a point of where it'll just start to turn over on its own weight, so to speak, and we'll see. And on an Elliott basis, I am counting the finishing move. I am counting a minute wave 5 to finish minute wave 5, and also minor wave 5, intermediate wave C, and primary wave B. Now, that's all a part of a larger cycle degree fourth wave. So once the cycle degree fourth wave is complete, again, what we look for is a primary C wave down, and it should be very fast, and it should be kind of feeling pretty ugly. But it's the way that the market's kind of set itself up for it. And so I'm looking like it's going to be pretty quick. It's like a lot of the moves we've had to the upside, and again, even to the downside, like in here, And then one like just kind of went, it just kind of dived, it just nosedived. Then we got this great rally going, but then nosedive, you know. So when we look at that, it's not so much that we get a lot of green and then a little bit of red. We're getting a lot of green, a lot of red, a lot of green, a lot of red. And now after this high, it's a lot of downside versus these surges higher. I am going to continue to expect those surges higher, but I think that they're going to be limited, and they're going to be limited to just not broad-based, so not broad-based on the market. So now inside this internal count, I have been counting an ABC, and we could say, okay, A, B, and then a 1, 2, 3, 4, that overlaps, but you might want to let it go. I don't know. Because if I do it on a closing basis, they don't overlap. So if it's a 1, 2, 3, 4, 5, and this is going to be the C wave, and I put the label 2 underneath it, then we're in the beginning. But guess what? Look how this is being left. And we just reopened, and we've got a little bit of weakness. A little bit of weakness to the downside. So you really can't start going below 839. So not a whole lot we got before this starts to overlap this, and this gets left as 3. So what could it be? Now, again, we're just looking right here. 1, 2, 3, 1 of C, 2 of C, 3 of C, 4 of C. We drop back down, and a 5 of C. And if that's the case, we're going to find support. And again, I'm just going to put some tags on here that could give us a little bit of a hint. And I'm going to do it this way. And I know that it might be just a tad different. But where that wave 5 would be equal to wave 1 is 16,713. So not all that much, but that would just be the 100%, and we need it really to go below here. So 1.618 is 16,607. Okay, not so severe. So there is the potential, and I'm going to leave open that potential, that the market has one more leg down to do. And technically, just get below 16,687, 689. And that was this low this morning. So once that's done, then I've got an ABC down. I can label it wave 2. Now, here's the other part of this whole count. I continue to feel that this is minute wave 3, minute wave 4. And again, so I've changed it. I still have that. Should the market somehow, build up its momentum and just really start to take off, and it's broad-based, and I mean, it's the Dow, it's the Russell, it's the S&P, it's everything, and we're all in this surge to flip everything back into a more positive mode, yes, then I could move over, and this would be wave 1, and this would be wave 2. And this would be wave 1 of 3, wave 2 of 3, and then we're in this massive move. All right, so that's one side. And again, remember, I'm running these side by side, but also understand what needs to go behind it, what we need to really see. It's not just going to happen because, okay, NVIDIA is going to have good earnings, or Apple might have satisfying earnings, et cetera. One stock's not going to do it anymore. We're seeing how 1 or 2 stocks push it up intraday, but with the balance of the market acting against that, we see that it doesn't last. Okay, so in other words, to get something where everybody participates and they do it all day long, we had all the money managers moving back in. So we had money managers coming in, we had all the portfolio managers, and they were loading back up. Okay, could that happen again? Yeah, I suppose it could. But that was after a very steady drop. I'm not really seeing the steady drops. We've seen kind of steady drops. But anyway, I think we could work our way higher, but it's going to be a challenge. Now, if indeed this did complete, if it did complete the wave 2, then how can we mark this out for what we might be looking at? We would again use extensions, and we go up, and then we bring it back down. Again, I'm just using current low. I'm not saying that that is the case. And then we have 0.618 at 17,135. Again, we're looking for it to go above 17,165. And then we have 100% at 17,412. But that would be a wave 3. Now, what else could we go here with? We're in minute wave 5. So these would all be minuet. Minuet 1, 2, 1, 2, 3, 4, 5. Minuet 3. And this is a 4th wave. Big, but it's still going to be a 4th wave. Not breaking any rules. Look and feel, we've been up against this many a time. It's just extended. It's getting where it needs to be. I think it fits cleaner as a wave 2, but it could be a wave 4. And if that's the case, then what we have coming on is we're taking this reading from here to here and bringing it over to here. This would be the small minuet wave 1 over to minuet wave 4 to show us minuet wave 5. Now, if that's the case, let me take this guy off and we'll do that. This is the potential. Market's going to let us know. So all things considered, they all come into play. 2.618 gets us up to 17,325. So this one doesn't carry as much weight, but it is a possibility. Because that's where we need to get above. But we're working up against a market that's weakening technically quicker than it's building to produce this stronger rally. So, which is why I'm basically leaving it as 1-2 right now, but I'm showing you the other possibilities. So again, right now in the NASDAQ, I'm leaving it open because you can see we're coming down. We're down 36. That high's 31. Actually, it's even less. It's even higher. That high is 41. It's already broken it. So, excuse me. So it's going to be that this is 1, 2, 3 of the C wave. We're 4 of the C wave. We're in the 5 down. Now, what can we do in this direction? Well, we can go like this. I'm going to go back over. Oops, I got to get that to stay there. There you go. So what do we got? I just showed you before, but we have it again, 16,713. We really need to get it below there to put a clean 5 in. And at 16,689, best bet, 1.618, 16,607. Outside of that, we do have a reading on the C wave that could come in at 16,541. Excuse me. Which again, if this was a wave 4, would break below that low or that high for wave 1. And that would disqualify that. That's why I'm leaving this as a wave 1. This would be a wave 2. Yes, we could see some more downside and before we get a rally. So we have a lot of stuff coming into fruition for Friday, one way or the other. Friday's an expiration. Friday is the January expiration. So it's the first expiration of 2024. We've had them all in between, 0 DTE, etc., and the dailies and stuff, and the weeklies. But this is the first monthly. And I think there's a lot resting on it. And that once that gamma, once the positions are released and settle, things could get really, one way or the other, things could get really kind of quick. So for tomorrow then, we're leaving open the potential that we're going to come back down. We're going to come back into this area, possibly as low as here, and to finish the C wave, label it a minuet wave 2, and then we start a 3rd wave. The 3rd wave should still resemble a 3rd wave. So we'll be looking for the rally to pick it up and just to kind of go and like the little train that could and make its way back above all of this. Once we get that 2 in place, we'll be able to put in some fibs to show us where we can go. But we're looking for a move above 17,165, which is this wave 3. And that would be to finish up minute wave 5. Now, minute wave 5, equality sits up at 17,595. So that remains a possibility. Now, it does not necessitate, even though that's the most common, it's not a requirement. So let's not be confused here as to what that fifth wave has to do. What the fifth wave has to do is form 5 waves. That's what I'm going to be looking for. Now, whether that 5 waves is going to come in the form of a triangle pattern, which I don't see at this particular moment. So I think it's going to be just a straight, 1, 2, 3, 4, 5, where 5 would be then expected to be the longest and the strongest. Right now, wave 1 is pretty, just in size, it's kind of extended, but wave 3 can get itself up there and put in a decent high, pull back and get up to 17,595 or up into that hood pretty quick. And I would say we got Thursday and Friday. If we get a solid rally for whatever the reason is, whatever they choose. So again, that's what's out there. So we're going to allow for, if it stops here and it just goes and it starts to go from here, then I'm going to have to allow 1, 2, 3, 4, 5, a small 1, pull back, and then we go. But I'd be looking for this thing to start rallying and not looking back. That's important. So we looked at the daily already, so we got to see how things are kind of falling apart. Let's go over to the S&P. S&P, same kind of story. And then I'm labeling, we're in a minor fifth wave higher. And I'm counting this as minute wave 1. And this is minute wave 2. This came courtesy of a subscriber. Thank you, Daniel. And notice that it on the nose, folks, on the nose. We can go and look at that. It bottomed at 47.46.25, and the fib was 47.46.32. But basically, you got to round it down to the 25 because this is the future and it doesn't trade in pennies, it trades in quarters. So on the nose, hit it, popped. But as in the NASDAQ, I think we need to allow for, I've labeled it because it's pretty clean, looks pretty good to me. We got the A, we got the B, that was pretty flat, and then we get the C, which it wasn't, but it didn't go full rogue. So it all looks pretty good to me. And got close. I said 47.71. It met that, but it kept going. That's fine. The next up, 47.31, still could be in play. All right, we're declining off a little bit. Doesn't make the world come to an end, but we might still get down here. It just moves the 2 down, and then we take off. Now, again, this also counts better as a wave 1 versus being a 1, 2, 3, 4, because you can see at that level, it really overlaps wave 1, knocking it out of the water. So again, is it a diagonal? I don't know. I don't think so. So we'll leave that open as well. Now, our fibs, in terms of minor wave 5, start to pick up at 48.81. That does take it to the new high. This is 48.41. So 81, that gives us a new all-time high. And it will depend on structure, whether I leave this as wave 1 or 1, 2, 3, but I can't because that overlaps. So this just going to sit there as probably a pause. This becomes the candidate, 49.92. Now you may ask, again, because I'm just going to flip very quickly out to our daily chart, and we're going to look at this. Okay. Rally, but it was punked out. Lower high, lower high. It's not getting anywhere other than continuing to point down. So the technicals, the MACD, the relative strength is weakening in the face of just 1 or 2 or 3 or 4 or whatever, how many stocks within the S&P 500 are actually performing well. We're seeing more stocks break down than we are seeing being built up. Granted, earnings have just started, but again, at least in the broader market, which includes the S&P 500, the airlines are kind of taking a hit. Banks, they're not really doing all that great. Morgan Stanley came out today. They decided they didn't like those either. Boom. take the stock down. So we continue to see just it to break down. But on the same token, I'd have to go back. And here in the S&P, now I got the daily up. I have to continue to allow for the possibility that, well, 48, 41, could that be it? Could that all be the way it says? It tried to get back up there, got to 38 or 36, whatever that number was. 1, 2, and we're going to start dropping. Now, what that would start to do is that it would pull the market lower real quick if we're in a third going down. So that's the name of that tune. Back down to that hourly chart. So what we're kind of looking at here could be done, but it needs to build. And it is sort of building. It is sort of building right there. And that's a good thing. They pull it back up and they start this thing, they get a rally going, then this is going to be secure. And we start to build and we start to build on both sides. Hourly chart, we get a 1, 2, 3, 4, 5. We put in a wave 3. Again, what can we estimate, guesstimate will fulfill the dreams of everybody? Well, 100%, we're right up there at that 48.82. And I was going to suggest that when I was looking at it before, it's like, it's there. It's a 618, so it's fib, and it should come in as resistance. What could it complete? Wave 3. So it's going to take a lot when you think about it. What's it going to take for the market to go from where it is and go up 100 points from basically where we are, 110 points? It's going to take a lot. Can they do it? Yeah, but they're going to have to come in broad-based, folks. That's my point. Both markets. All of the markets are going to have to say, yep, we're all in on it, and go. So we're going to have those asset managers, whomever's going to come in and start buying, they're going to have to do it across the board. Otherwise, we continue to deteriorate, and it's just going to be a couple of stocks that are going to drive it higher, and we might end up with failures, but yet to be determined. Okay, so for tomorrow, I think we need to leave open the potential that we might just drift one more time, come back down towards 47.31, but just get below that 47.46. Puts us right in the line for that, basically. As long as it holds, then we can put an ABC, still put the 2, and we'd look for the rally to start. If the rally is on its way and starting, because this is going to label as wave 2, completion point, then we're looking for it to break above the 20, get it back above the 200 and the 50, which are kissing cousins right now, right there. And then also the 100. And get back above that resistance at 47, basically 4,800, 47.96 to 4,800, and just start to move like it has a purpose and go. All right, that's where I'm going to kind of complete it for today. And let me just take a quick peek about what we got coming out tomorrow on Thursday. First thing in the morning, Atlanta Fed President Raphael Bostic will be speaking at 7:30 a.m. Eastern. 8:30 a.m. Eastern, we have initial jobless claims, Philly Fed manufacturing, housing starts, building permits. Philly Fed does have a tendency where it can really kind of rock the market in one way. So can jobless claims, to be honest with you. And again, they're showing that they're increasing. So we might decide that they like it because that means the Fed's winning, right? They're winning. They're going to have to lower the rates because whatever. Because unemployment rate's going higher. So again, not a good deal. Anyway, and then at the 12:05 p.m. Eastern, Atlanta Fed President Raphael Bostic will be speaking somewhere. So those are our economic data for tomorrow morning, and then who from the Fed will be out there on the stumping. All right, that's it. Next update, Thursday, January the 18th.